These calculations and figuring this out go to charting and go to many, many technical things. And the level I've always said is 30,500. That's the key level. You have to have 5 trading day closes above that level in consecutive days. And if you look here, we've even pierced 31,000 multiple times, yet we have not had 5 consecutive days above 30,500. So that continues to be the line in the sand.
In this highly informative video, Gareth Soloway, President and CFO, Chief Market Strategist of InTheMoneyStocks.com, delves into the latest economic data and its potential impact on the market. From job market resilience to the response of the Federal Reserve, Gareth provides expert insights into how these factors can influence Bitcoin and stocks. Join us as we unravel the complexities of the market with Gareth Soloway's expertise.
So yesterday we saw an ADP private sector number that was really strong, close to 500,000, and the markets freaked out. They thought that, oh my goodness, this could mean the non-farm payrolls is going to be really, really hot. Does the Federal Reserve need to hike even more than two times in the remainder portion of the year? And so we saw a sell-off yesterday, and today's jobs number came in just slightly under expectations, which kind of calmed those nerves. So I think that, again, gives the investor the green light to say, okay, the Fed may still hike a little bit more, but there's probably, if the jobs numbers are getting a little bit weaker, maybe there's not incentive or the want by the Federal Reserve to continue to hike much more past that. So I think it essentially opens a light at the end of the tunnel. I think the headline number is what's driving the retail crowd. And interestingly enough, early in the day, we did see the markets down a little bit. And I always look at the early action in the stock market as being institutional, right? That's when the most volume is present so that they can make their trades. And so I think, again, the institutions are playing it a little more carefully here, where they kind of sold into this little bit of a move here. And now that they're done for the day, it's a Friday in the middle of summer. I mean, every big institutional trader's already gone for the day at this point by midday on a Friday. I think the small investor bids the market up. And the question is, how much higher do we go? I actually think that the jobs numbers at this point are making a turn. We've seen the unemployment numbers or the filings for unemployment start to spike up a little bit over the last few weeks or so. And I think that's a new trend that's starting. So I expect the jobs numbers to continue to get weaker. I think there's this overall feeling that nothing can take us down, and there's some songs that mimic that and kind of talk about that. But when you get this momentum in a summer when the volume is light, it tends to be a mob mentality, and I think the markets continue to float up until something cracks or breaks. And I think, again, the labor market at 206, was it, or two something like that, was a little bit better than expectations, but by no means was it a bad number. And I think that's the key. As long as it's kind of this Goldilocks, the market can continue to float.
Right. Okay, so let's turn to Bitcoin. Actually, we're going to come back to the stock markets in just a bit, but a lot of people will want to know your updates on Bitcoin. Last time we spoke about a month ago, Bitcoin was just inching up towards 30,000. I think you told me that once Bitcoin maintains the $30,000 level for a number of days, I think 5 days minimum was your expectation.
30,500, yes.
30,500 for at least 5 days. Then we can start to see some moves. Is that have we met that criteria yet?
No, and that's the amazing thing about it. So these calculations and figuring this out go to charting and go to many, many technical things. And the level I've always said is 30,500. That's the key level. You have to have 5 trading day closes above that level in consecutive days. And if you look here, we've even pierced 31,000 multiple times, yet we have not had 5 consecutive days above 30,500. So that continues to be the line in the sand. And you're right. This is what we were talking about a month or so ago when we last talked, and we still have not been able to do it. So for me, I'm looking at this 30,000 low where we've been going sideways now for about 2 to 3 weeks, and the $31,000 high. And we're basically staying within this range, $1,000 range. And I'm looking to see which way does it break. If we break below 30,000 on a daily closing basis, I think the market could be in trouble for Bitcoin. We could see a drop down to, let's say, 26,000 or 28,000. If we can break above 31 and, again, hold above 30,500 for 5 consecutive days, you should head to about 35,000 on Bitcoin. So the level goes all the way back here, right? So you have to go back all the way to the cycle the bear market or the bull market cycle of 2021. And it's connecting as many pivot points to the daily closes as possible. And again, that's what the line kind of comes out to be. So right at that 30,500 on a closing basis for 5 days, 31,000 would be a good breakup again if we got to close above that. But yeah, it comes into just technicals and just finding these chart levels. And it's amazing how a lot of people talk smack about technical analysis, but again, we can see how this level just is a level. I mean, if no one's listening to me, I mean, maybe a few people are, but overall, this is big money kind of controlling this level here on a technical basis, and it shows right here.
I think a lot of people are listening to you, which is indicated by the popularity of our interviews, Gareth. But I'm curious as to why Bitcoin has not yet breached $30,000 and maintained that momentum. There must be a key psychological resistance around the 30,000 number. Why is that, you think?
The number one, it's the even number of 30,000. So when you go from the 20s to the 30s, there's going to be some sort of factor where people who held all the way down to 15,700, there are people now that are getting back to these cycle levels that were major on the last cycle that are saying, all right, I'm getting a little nervous here. They're more likely to sell. There's also other people that bought at 15,700, 16,000, and now they're up a full 100%. And we know that even numbers tend psychologically to make people say, okay, listen, I'm up 100%. I'm going to sell and take some profits. So there's multiple psychological factors going on here, technical levels, psychological. And it is amazing to watch how the market has struggled at this 30,000, 31,000 level. The S&P 500, the obvious one would be the all-time high, right? If we just go up to that all-time high. But there are technical levels that on a psychological basis play out. And in fact, let me show my screen here, looking at the technicals of the S&P. And there's this trend line that has been major going all the way back to the COVID low. And what we can see here is on this first major downshift, we came right into it. And if I zoom in, you guys can see how it kind of played right there with that level, bounced off, came back, hit it again, then broke below it. And then look at how underbelly of that level kept on hitting. And sure enough, right over here, we can clearly see that right there, that's where this market has run into pressure. I think Bitcoin it's a little of both, right? So you have the AI narrative with stocks like NVIDIA and so many other companies. I mean, you could go back in a lot of the conference calls from last quarter and check how many times AI was mentioned, and there's a correlation to how high the stock has run based on how many times it was mentioned in the conference call. So there's a lot of things like that going on where you have the momentum driven. I do think there was a lot of money on the sidelines. Again, the light volume summer months are generally months that can be driven by the retail crowd. And so you're seeing a lot of money that was sitting on the sidelines come in. And I think on the other side, you have Bitcoin where, yes, we're starting to get some clarity for Bitcoin alone. We see Bitcoin dominance pushing up above that 50% level, and the BlackRock news, the Fidelity news on a spot ETF. So it's positive. It's just still kind of a question mark. So I think that's where you're struggling on Bitcoin at this point. By the way, I also think that you have to look at the M2 money supply. You have to look at how much liquidity is in the market. Liquidity keeps dropping off in the entire system, not just the stock market. Stock market is one thing. People are still willing to chase, but M2 supply has really fallen down here. And there's a correlation between M2 and what risk assets do. You're seeing this kind of opening, and I know Ben Cowan and I have discussed this quite a bit in the no-shill zone. You have this M2 and stock market diverging, and what that does, folks, is it tells you that at some point that mouth has to snap shut, whether it's M2 rising to meet the market or the market's falling to meet M2. So we know we don't know any of the security classifications now that have to do with what the securities of crypto will be, and I think that's just keeping so much. I mean, I can't find any big funds or big institutional money or major money that's buying altcoins right now. I can find ones that are buying Bitcoin. So that's the difference maker right there. And I still think Bitcoin dominance based on the chart. It's interesting because he uses different metrics than I, but both our metrics show Bitcoin dominance going to about 58%.